So when we talk about different levels of risk tolerance, right? So most banks are going to cut it off at a 620. But that's not the case with the mortgage lender like myself. So we're able to go down to 500, sometimes even lower than 500. But what we look at is the complete credit picture for a person. So not only the score, we're looking at everything that goes into the credit, all of the different things history-wise that are on a person's credit report.
Okay, so you're looking at the complete person,
Right.
essentially. And so based on that, you could probably underwrite a loan for a veteran that is a lot lower than what most of your banks, a lower credit rating, or a credit score.
Yeah, certainly.
So we want to welcome everybody back to the Mortgage Mindset Podcast, where we help you get your mindset right, ready, and right.
To be able to purchase a home.
There you go.
Yeah.
All right, so that's what we want to do. My name's Kendall. This is DeCoven, and we're really excited about today's episode. We want to speak specifically to those who are veterans in that position. It's a very unique position, and there's a lot of unique benefits that come with being in that position when it comes to buying a house. So we want to speak specifically to those individuals who have a VA loan. Is that the correct terminology?
Yeah.
A VA loan available to them as one of their options. So when it comes to the VA loan, there's a lot of maybe misconceptions, and then there's a lot of things that maybe somebody can learn. So it'll be a quick episode, but it'll be very valuable to those who fit in that box.
Yeah, that's right. That's right.
So to go, and when it comes to a VA loan, first of all, who originates a VA loan? Where does that come from? What's the source?
Yeah, so a VA loan is an option that's available to those veterans that are eligible. They have to have the VA status in order to be able to do that, to use that as an option. And if they do, then the VA loan is going to be available to them.
Okay. Now, is that a loan? And this is just maybe something that we want to clear up any misunderstandings. Do they have to go directly to the government to get that loan, or can they get that loan through any of their local mortgage providers?
Yeah, so they can get the loan through any of their local mortgage providers, but there is a VA portal or site that they can go to make sure that they're eligible for a VA loan.
All right. So now, when it comes to the unique features of the VA loan that most mortgage providers will be able to originate, what are some of the unique features of VA loan versus, let's say, conventional FHA or some of the other options we've talked about?
Yeah, so the nice thing about that VA loan is that it allows a person to be able to purchase without a down payment. It's 100% financing. So a down payment can be an obstacle for some people, but for those veterans, they really don't have to worry about that hurdle.
So we talked about 20% down payments, 10% down payments. I think we even talked about 3.5% down payments in rare cases.
Mm-hmm.
So this is a situation where, let's say they have a $300,000 house, they have their eye on.
Right.
How much money do they have to come up with?
Zero is a down payment. So
Wow.
100% financing is what we're talking about.
So that's a pretty unique option. I will say that's something that if somebody finds themselves in that position, qualify for a VA loan, kind of a no-brainer, right?
Mm-hmm.
You want to go ahead and try to get something like that. Are there any other unique features? Like, do they have to have mortgage insurance or anything that's attached to it?
That's another good question. So for a veteran, there is no mortgage insurance attached to it. So that's one thing that they can get rid of. They don't have to worry about having that additional payment in there for mortgage insurance because there is no mortgage insurance for that.
That's another really big feature. Now, up until this point, we've talked about some of the things that anybody who's trying to qualify for a VA loan is going to be able to get from most of their mortgage providers. But they have to qualify to a certain point.
They do.
So when we're talking about doing business with you, I do know that there's some differences.
Right.
So walk me through maybe differences with, well, what are the differences? Let's list them first. What are the differences that we're looking at?
So we want folks to know that not all mortgage lenders are the same, right? So we all have different levels of risk that we're willing or able to take on. So things like a person's debt to income ratio, you may hear the term DTI or acronym, right? And then also their credit scores are two different factors that different lenders have a tolerance of risk for. So that's something that a person wants to make sure that they're aware of.
Okay. So now, a person's credit score is usually a pretty big deal.
That's, yeah.
Most of the times, most lenders are going to want to see 620 and above, or they'll, it'll be hard to qualify for. If you've got low sixes, you're going to have to do some credit work.
Right.
You have to get a little bit of counseling, do some credit repair work, which is something that's definitely an option for many people and a good option.
Yeah.
But is that always the case with the VA loans that you've seen come across your desk?
Mm-hmm. So when we talk about different levels of risk tolerance, right? So most banks are going to cut it off at a 620. But that's not the case with the mortgage lender like myself. So we're able to go down to 500, sometimes even lower than 500. But what we look at is the complete credit picture for a person. So not only the score, we're looking at everything that goes into the credit, all of the different things history-wise that are on a person's credit report.
Okay, so you're looking at the complete person,
Right.
essentially. And so based on that, you could probably underwrite a loan for a veteran that is a lot lower than what most of your banks, a lower credit rating, a credit score.
Yeah, certainly. So just because the bank says, your credit score isn't where they want it to be at doesn't mean that's the end of the road, and that you don't have any other options.
So there's a lot of veterans out there who either who have finished what they were doing with the military, or perhaps there's individuals who are looking to start investing while they continue on their tours. They may have walked into a bank thinking that they got a VA loan and just got flat out denied and told, no, sorry, you can't get one right now.
Yeah.
Now, if that's the case with a person, many times they probably give up. So what you're saying is that they should give someone like yourself a call, specifically yourself, give you a call.
Right. Exactly.
And then they'll be able to continue that process to find that home that they're looking for, whether it's a good investment or the dream home.
Yeah, absolutely. Absolutely. So we want to have an opportunity to take a look at it. If someone's told you no, that you couldn't get it done, there's a chance that it's, the bank that's not able to or not willing to do that loan. But we certainly want to take a look at it and see what we can do on our end.
Okay. So we talk about credit score, and that's usually what most people are looking at. They're looking at their credit score, and perhaps they just kind of, after looking at what they've got, they go to my free credit report.
Right.
They pull it and they see it and they hear, it's in the fives. It's really not possible. So we can let everyone rest assured that if you contacted Coven, that you'll be able to possibly get a little bit further in the process based on just the credit scores being lower. But now you also mentioned debt to income ratio,
Right.
and that's a unique situation, especially for veterans, that perhaps the amount of money that they have coming in versus the debt load that they're carrying currently before purchasing a house
Right.
may, to some banks, disqualify them. And they may look at it and say, no, not really interested in lending on that. Why would some banks do something like that?
Exactly. So some banks have a maximum debt to income ratio of 45%. Sometimes they'll even go up to 50%. Right. But they'll cut it off there. Right? So even if you have good credit, they may say, hey, you have too much debt. We're not able to lend on this.
And if a person wanted to take a look at how to calculate their debt to income ratio, what would be a simple back of the napkin math way to get that debt to income ratio based on their bills and their pay stub?
Yeah, sure. So they would take the total of all of their monthly debt,
Okay.
Just the monthly number though, right? So add up all of your monthly debt, include the house payment, and then the formula is debt divided by income. So
Okay.
yeah, add up all the debt, mortgage payment divided by the income, and that's how you know what your debt to income ratio is.
Okay. All right. So a person could find that out. And once again, a person may be educated to the point of understanding what that is, look at it and realize, I'm never going to get a loan with a conventional banking establishment.
Right.
So they call you.
Mm-hmm.
What are some of the things that you've seen come across your desk that kind of fly in the face of this conventional wisdom?
Yeah, sure. So like I mentioned, the cutoff may be for banks, a 45% or 50% debt ratio. So easily, on a daily basis, I've seen 57% ratios get approved. Right. I've even seen up to a 77% ratio get approved.
Wow.
So just because the bank tells you, hey, 45%, 50% is not going to work, doesn't mean, again, that it's the end of the road. Let a mortgage lender like myself take a look at it, and we may be able to get you qualified even with the higher debt to income ratio.
Okay. So the numbers that people are looking at sometimes really just don't apply to what you can do for them. So the key here, I guess the key takeaway is to call you.
Right.
To reach out, figure out what you can do for them when it comes to the VA loan program, because the program's out there and the lenders that are out there aren't always willing to work with somebody who perhaps doesn't have stellar credit or the debt to income ratio is just off the numbers that they've set as a baseline.
Right.
So you guys can look at the whole person, which I think is really something that's important. I mean, the Mortgage Mindset Podcast, we're trying to get everybody's mind right to look at money the right way so that they can get into the home that they want. But you got to look at people the right way too.
That's true.
And it's really nice that you are, moving forward by looking at the whole person and realizing whether or not they can really afford a house based on who they are, not just based on the number on a piece of paper.
Exactly.
So is there anything else about the VA loan that you really think that people should take away from this conversation?
Yeah. So, I mean, another very nice thing is, like, even if you have one of those situations that we mentioned, maybe your debt to income ratio is high, your credit's low, even despite those things, you're still able to qualify for 100% financing with no mortgage insurance. So it still makes it a great loan for those individuals that are eligible, that qualify. Even if you have one of those situations, let us take a look at it and see if we can fit you into the program and help you to qualify for it.
Okay. Well, I'm Kendall. This is DeCoven for the Mortgage Mindset Podcast. We're helping you get your mind right.
Right, and purchase the home that you want.
All right. And we're out.